Have you ever wanted to invest in farmland but didn't have any idea how to do so? Today you'll find out how. Welcome to Investor in the Family Radio, a podcast about learning to invest. My name is Brian Bain and I'm your host. And today we're taking a brief pause from our Becoming Buffett series where we've been going week by week through the annual letters that Warren Buffett has written to the shareholders of Berkshire Hathaway. We're taking a pause from that this week because I had the opportunity to do a really fun interview with someone, a man named Chris Rawley. And Chris is the CEO and founder of an organization or a company called Harvest Returns. And that is harvestreturns.com is the website. And basically what Chris and his team are creating at Harvest Returns is a crowdsourcing platform for allowing investors to invest in farmland, agriculture, timberland, and things like that. And so when I heard about the opportunity to interview Chris, I was very excited to do so, and even was willing to do so as a way of interrupting our ongoing series because investing in farmland is something that I have personally been interested in for a long time. I'm also very interested in the crowdsourcing space when it comes to investing. And so again, with both those things coming together with Chris's business, Harvest Returns, I jumped at the opportunity to interview Chris and really enjoyed it. And I hope you will as well. And again, be sure and visit Chris at harvestreturns.com. But enjoy the interview and we'll talk to you soon. Well, hey, Chris, welcome to the show.
Hey, thanks for having me on, Brian.
Absolutely. Well, I'm thrilled to have you here with us. And as we talked a little bit offline, I've been interested in agricultural and farm and timberland investment for a long time and in different capacities. And in the back of my mind, I played with the idea of buying some farmland and renting it out or different things like that. But especially, I'm always curious in unique alternate investment opportunities. What are things that are not the mainstream, hey, let's go buy Apple or options in Apple type stuff, but what are really very legitimate opportunities, alternate investments. And so when I heard about Harvest Returns, I heard about what you're doing, wanted to have you on the show and learn more about it. So do you mind just giving our audience a brief introduction into who you are and what you're doing at Harvest Returns?
Certainly. Yeah. So I am actually not a farmer. I did not grow up in the ag world. In fact, I actually grew up in North Dallas. I did go to an agriculture school, but was not an agriculture major. I went to the military.
What school was that?
That was Texas A&M University. So
Gig-em Aggies.
Yeah, Gig-em. So I went to school with a lot of people who were there doing forestry science and animal science and ag econ. But I was off doing my own thing, and so then I went into the military, into the Navy. Did that for several years on active duty. And ended up got off active duty and went to work for a real estate company. So my kind of first entry into alternative investing was with real estate. And I actually started investing in real estate, several years ago and building my own portfolio in real estate. And I like that. And long story, worked in various different industries, spent a lot of time back getting called up after 9/11 in the reserves. But about a year ago, actually a couple of years ago, I became very enamored with agriculture as an asset class. We've all heard that old adage, invest in what you know. And so agriculture is one of those asset classes that we just take for granted. We're all eating it, we're drinking it. We're wearing shirts and sweaters made out of agriculture products, and we're living in houses made out of timber products, agriculture. Yet there's not a whole lot of people that invest in agriculture. So at the same time I began getting interested in agriculture, I also kind of found out about this crowdfunding thing. And I'm sure some of your listeners know about the Crowdfunding Act of 2012, which enabled companies to raise money using crowdfunding. This is equity crowdfunding, so it's different than social crowdfunding or donor crowdfunding like Kickstarter or GoFundMe.
Right.
This is for investors. So there's a number of real estate companies out there doing it. Let you invest in an apartment building or an office building or take a loan out on someone who's flipping a house, that sort of thing. But I saw a space for doing the same thing in agriculture. So last year, my partner and I created a company called Harvest Returns, which will enable investors to put some of their money in private placements of agriculture. We basically want to become the marketplace, sort of the Expedia of online investments in agriculture, and that's what we're doing at Harvest Returns.
So what does that look like? So I guess, do you guys identify a piece of land that you want to buy, and then you allow people to chip in at various increments? How does that look?
Very close. So we don't have an equity position in the land. We have people who are either farmers or landowners or investors who have an existing operation or want to expand get into farming, but basically sponsor a deal with us. So this is very similar to the way some of the real estate crowdfunding companies work. Is they list the deal on a platform, make it available to our investors. Our investors can go onto the platform, browse through the deals, decide what they want to invest in, sign the documents, and then they become a part owner in that agriculture investment. And when you look at the agriculture food chain, the supply chain in agriculture, it's everything from the inputs, which is the seeds and the fertilizer and the land, to all the way up to what ends up on your plate or in the grocery store. We're focused on the production side. So that's the growing of crops and the raising of agriculture and the underlying asset, which is the land that's done on. So the deals that come to us that are going to be listed on our platform are all revolve around owning the land, which is good because that's kind of your safety net in agriculture investments. Just like if you're investing in real estate, you've always got, even if the building empties out, if the economy turns down or that particular asset doesn't perform well, you've still got the underlying asset. So in the case of agriculture, that's land.
So I want a couple questions. Let me go back briefly to the Crowdfunding Act of 2012 and tell me more about, because I think a lot of our listeners may not know what that means or why that was significant. What did that enable you to do that was not possible before?
Right. So crowdfunding is essence pooling smaller amounts of money together to buy a larger asset. And the Crowdfunding Act of 2012 enabled such things such as retail crowdfunding, which enables non-accredited investors to invest, as well as accredited investor. It also has rules around the solicitation or the advertising of these types of investments. Initially, our deals on the platform will be for accredited investors. And for those of your listeners who are not familiar with that term, accredited investors are someone who has high net worth, which is generally over $1 million in investable assets or high income. But we're also going to offer some opportunities for people who aren't necessarily accredited investors to get in some amount of agriculture in their portfolio. So whether you have $1,000 to invest and want to put in your portfolio, or $100,000 or more, we're going to have some options on there on harvest returns.
But at this stage, it's primarily focused on accredited investors.
That is correct.
Okay.
Right.
When do you anticipate being able to roll out a non-accredited investor opportunity?
Probably by the end of the year is what we're working on. Great. So, but in the meantime, people can come and learn about agriculture. There's a lot of compelling reasons to invest in agriculture, and I like to kind of talk about three different ones. The first is global demographics. Obviously, the population of the world continues to increase. That's just common sense. But with that comes urbanization. So more and more people are moving from rural areas into cities, and part of that is these cities expand. They're growing over arable land that was traditionally used for farming, and now it's being used for living spaces. So the amount of arable land is shrinking. At the same time, the population is increasing. The second piece of that is that as populations become more wealthy, and we're talking mostly developing countries because this shift happened in the U.S. Years and years ago. But as people become more wealthy, they shift from eating plant protein into animal protein. So that means that a greater number of acres or more agriculture will have to be devoted to raising protein, either vegetable protein or animal protein. The second reason that people should be interested in putting some agriculture in their portfolios is frankly just the returns. Agriculture as a whole farmland specifically has outpaced the S&P 500, the AAA bond index, REITs, gold, and of course, the inflation since 1970. So as an asset class, it index as a whole, it's outperforming other asset classes. And the performance drivers of that, return is three things. One is the underlying commodity, the price. So whether you're talking corn or wheat or grapefruits or whatever, That's one of the aspects of the return. The second piece is, as we already discussed, is the price of the land. Mm-hmm. And the final kind of thing that drives the alpha, that really drives the alpha in an ag investment, is the operations and the management of how that land is taken care of and how those crops are done. But for me, the real reason that I want agriculture is because it's something tangible. It's just like real estate. It's a real asset. There's something behind it. It is generally returns from agriculture and timberland are positively correlated to inflation, so that the less the dollar is worth, which, as we know, that's a constant erosion of the dollar, and it has been for some time now. That agricultures are negatively inverse to that. So agriculture is going to grow, but it's also negatively correlated to other financial assets. So if you have stocks and bonds in your portfolio and there's a major correction, putting something like agriculture in there will kind of hedge some of that correction and keep your portfolios more stable with stable returns.
That's pretty impressive. When you were going through your second point of returns, and you're going to say that farmland has outpaced S&P, REITs, gold, and obviously I was waiting for you to say since, and I was waiting for you to say since 2010 or since 2007, but since 1970, that's pretty significant. I was actually pretty surprised to hear you say that.
Yeah, that's not my stat. That's actually from TIAA, which is as you probably know, it's the big pension fund. They manage a lot of retirement money. They have a farmland research center. That's one thing that consumers or the DIY investors should think about is the institutional investors. So we're talking large pension funds, high net worth people, very high net worth people with family offices, and sovereign wealth funds, and the university endowments all have farmland and timberland, or I should say all, but many of them have farmland or timberland in their portfolios to hedge some of their financial instruments. So this is not something that's unique. It's not something that's a novelty. It's a real asset, and people are investing in it. The problem is it's up till recently, it's been very challenging for people, the average consumer, to get into a farmland investment. So certainly you can go out and there's always farm for sale. You can go out and do your research and actually purchase a farm and hire somebody to work on it, but that's going to require a lot of capital up front, and you really have to know what you're doing. So our deals are our private placements. The sponsor's already done that work for you. It's like any deal. You have to do your due diligence and your research, and we try to provide as much of that as possible on the platform for the investor to make his or her mind on how much they want to put into that particular investment.
So if you have just to use real estate as an example, you have a sliding scale of opportunities to invest in real estate in terms that vary in terms of risk and also just hands-on involvement. On one end, you've got owning a rental property. And so you're in charge, you've got to manage the tenant, you've got to manage repairs and all that kind of stuff. And the potential return is much higher, but also so is the hands-on aspect and the potential risk with the mortgage. And then you keep sliding across, and then kind of a few steps over, you have REITs, where basically a REIT is, okay, I want to benefit from someone else's management of real estate, essentially. And then maybe you can move on to like ETFs and stuff from there and kind of get more and more removed from the actual asset. And so I guess in this situation, you also have, like you said, I could go out and buy some farmland and have someone manage it for me or run it or farm it for me. So that'd be kind of the equivalent of me owning a rental property, essentially. And then one step over would be kind of like a farmland, quote unquote, REIT, which is kind of like what this would be, except on a non-publicly traded level. Is that accurate?
Yeah, that's pretty close. So there are some farmlands, publicly traded stocks. There's some publicly, just a handful of REITs for farmland and timberland. Some of those have one of the problems with those is they're correlated with a greater equity market. So in some cases, if there's a major stock market downturn, some of those are gonna have some damage in the wake of that correction. But those are some good products to kind of put your toes in the water in agriculture. And then there's also some funds, but some of these funds that are out there in agriculture are $100,000, $250,000 minimum. So they're really not suitable for most investors. And some people, if you want to get very speculative, there's actually people that there's an entire commodity market
Sure.
based around agriculture, but that's not really suitable for investing. That's more speculating or used as a hedging for if you happen to be in the farming industry. And then, like I said, there's that farm ownership. So we're offering that interest in a private placement, which is somebody else has done all the research and provided you the opportunity to get in there with $1,000 or $5,000, depending on what the specific investment is. And we just want to. There's the growing movement of everybody knows about farm to table and farm to fork and those sorts of things. We like to say it's a farm to portfolio. So you're getting closer to the
nice.
Closer to the people that are producing your food. Something, as I said, we all take for granted.
So I want to again back out again and make sure I'm understanding the process. So if I'm a farmer. The way, so in a sense, you guys are basically like you want to be a marketplace. Like you mentioned Expedia earlier. So would that be an accurate way to describe what you're trying to build? You want to be a private, essentially basically a private equity farmland, timberland marketplace. Does that sound?
Yeah, that's correct. That's pretty accurate. We are, whether, on Expedia, if you want to stay in, the local motel for $69 a night or the Waldorf Astoria suite, you can do all that on that one platform, and that's what we're working towards as well. Where there will be some deals for the non-accredited investor who is just interested in this sort of asset class and wants to get in there, as well as somebody who has a more significant portion of their portfolio or a higher net worth.
Yeah, I'm playing around with the website actually right now as we're talking, and so you have the piece under raise money, and you have this option for farmers. And so the idea would basically, if I'm a farmer, and you mentioned this earlier, and I think, well, man, I really want to expand my land or somehow expand my operations, then this is just, and so I think of what are my options for doing that? Well, I can try to fund it out of my existing capital if that's an option. I could borrow money from a bank, or I can try to raise money. And of all the different ways to raise money, you want farmers to think, well, hey, come to Harvest Returns. You can raise money from a whole pool of different investors, and it's a fairly controlled environment, and it's a little, I guess, cleaner because you don't have to deal with individuals. And I guess that's some of the appeal there. So it makes it a little more, I guess the appeal to them is it's easier to raise money, right?
Yeah, that's correct. And one of the other reasons that a farmer or a rancher might come to us is some specific types of agriculture are very hard to get lending on. So think of something like a tree crop where you're starting with raw land. We're actually talking to some olive farmers in South Texas about this. You start with the raw land, you prepare the land, you put in the irrigation systems, you plant the trees, and then you get a crop 4 or 5 years from now. Well, if you're a lender, that's really not a good option for you, because you're looking to get your payments on your loan immediately. And if it takes 5 or 6 years to get that first crop in a return, that's more suited for investors. So we want to provide those type of specialty crop producers an option to get alternative financing.
So one of the things then from the investor end, obviously one of the benefits of public markets is there's a high level of liquidity. And I've looked in some of the different real estate funds, crowdsourcing funds that you mentioned. There's a bunch of those out there right now. I've looked at a number of those myself.
Right.
And, one of the concerns, obviously they're not all created equal, but one of the concerns for some of them is liquidity. Because you think, well, if I put some money in here, and even if it does perform like I want it to, my money's quote unquote trapped or, held hostage for 10, 15 years. How do you foresee that happening with Harvest Returns? Is that a similar type idea, or just depends per situation?
Yeah, it's going to be situationally dependent. So the first thing to think about is agriculture is a long-term investment. It's a way to grow your wealth. I mean, even though some of the returns are pretty solid, it's not something you're going to trade in and out of. And, liquidity is a double-edged sword. The bad part of liquidity is if you need your money right away, it's hard to get out. The good part of liquidity is if there's a major market correction, it's hard to get, you don't have to worry about it because your market's invested. But for us, there's a couple different options. So one would be if it's a land play where we expect the price of the land to increase, and we're actually looking at some deals in emerging markets where that might be possible. Just the land's very cheap. You have an estimated time period, say 4 or 5 years. The crops are going to grow. The crops are going to produce an annual yield. and the land's going to appreciate. And at that point, the sponsor will make a decision. We've achieved our desired investment results and it's time to sell. And then the investors would get their money back. There's also a more longer term deal, especially when you're dealing with things like timberland. But one of the ways that we're looking to offer liquidity is after a certain period, there are some third party services out there that will buy private placements. They'll kind of do an assessment of the market value.
Interesting.
So say if you put in $10,000 and then 3 or 4 years from now, the market value is $11,000 or $12,000 or $6,000. It's again, market based. That third party service will buy that and market it out to its investors. And we're also thinking about doing that on the platform itself, where our investors would kind of have the right of first refusal on any sorts of interest in these deals to provide them to other investors.
Almost like a lender, like selling a note. If they want to cash out early, they can sell it maybe at a little bit of a loss, but they have their cash right away.
Yeah, exactly.
Cool. So you guys, obviously on the front end, you're pre-screening a lot of these deals. So farmers or people in ag will come to you and say, hey, we want to host on your platform. What does due diligence look like for you guys in deciding whether or not to accept someone on your platform?
Yeah, that's a good question. And obviously, because our platform, we don't necessarily have an interest in these deals, where we make our money through sort of listing fees, commissions, that sort of thing. Right. People are like, well, what keeps you from putting a junky deal up on the platform? Well, obviously it's our reputation. That's the one thing that we have. And it again, kind of following the model of the real estate platforms, most of them have done a really good job of keeping their deals well, because they know that they'll lose business if one of their deals goes south and their investors back away and it becomes a reputational hit. So we believe strongly in doing, the most due diligence we can. In some cases, we're actually sitting down and meeting face to face with the sponsor. We're visiting the land or visiting the operation, and we'll disclose that when we do that. But in other cases, in any case, we're always doing a kind of a deep dig on the sponsor. What's the sponsor's experience in growing this particular flavor of agriculture commodity? What is their track record? What is their financial standing, credit score, all that kind of thing. So it's most important that with any deal, no matter whether it's agriculture or real estate or a company, you need to have confidence in the management team. So that's the first piece. Second is we're looking at the market dynamics of a particular investment, whether it's commodity. Some commodities are pretty trendy right now, and you want to follow those trends if you're looking for higher gains. Stuff like almonds, tree crops seem to be a pretty good investment these days. Organics, non-GMO foods, these are all the food trends everybody's following. So They're also all the investment agriculture trends. So that's one. We're looking at the location, the suitability of the location of the deal to grow, what's expected to grow, the track record of crops of that kind actually growing in a specific location. Obviously, we're looking at the financial returns expected, and we're in some cases we're also looking at kind of the social aspects, because I think some of our investors are interested in that, even though they want to make money.
Sure.
Is this organic? Not that we're also offering, of course, deals that are non-organic, but a lot of investors might prefer the sort of social. Is it being sustainably grown? So that's both economically, the people that are involved, if it's in an emerging country or economy, is there exploitation of the labor and all those sorts of things we want to avoid. So we've got kind of a checklist of due diligence that we go down for every deal, and we're pretty confident that the deals we list will give some nice options to our investors.
And then I guess once you list them on your website and make them available, I guess you'll kind of put all that due diligence into some kind of a prospectus type document for people to review. I guess that's how it works.
Yeah, exactly. So there's, there'll be some market information, sort of, just to kind of give investors an idea of what they're investing in, and they can dig deeper if they're interested. And there's a subscription agreement and a private placement memorandum, just as there would be with other types of deals.
And I guess because ultimately the deal would be like, if I'm coming on, if you've got a farmer and then I'm coming on as an investor, ultimately the deal is between myself and the farmer. You guys are purely just the mediator. You're just, again, the marketplace bringing us together. So I'm not actually doing a deal with Harvest Returns. I'm just doing it through your platform.
That's correct.
Interesting. This whole idea is so fascinating. Do you see other, and you don't have to name names because I don't want you to name competitors on my show or that kind of stuff, but obviously there's a number of crowdsourcing opportunities like this, like Fundrise and stuff like that is like a kind of a well-known one in just the pure real estate space. Do you know of other companies doing this in the agriculture focus space?
Yeah, there's a handful. So the interesting thing is you mentioned real estate. I heard a statistic a couple of weeks ago that there's 75 different real estate crowdfunding platforms.
That is amazing. Now, of those, doesn't surprise me.
Yeah, of those, I know about a dozen or so, and I know a couple of them very well. But surely there's going to be some consolidation. But it's an emerging market. On the agriculture side, there's a few that have popped up very recently, but their business models are a little different than ours. In some cases, they're very geographic specific, whereas we want to kind of be agnostic and just offer as wide a variety of investments, both geographies and types of crops, and risk and return profiles on our platform.
So, what does regulation look like in this area? You mentioned you mentioned the Crowdfunding Act of 2012. Did that basically say, hey, anything goes? I mean, obviously, there's laws that abide and all that kind of thing, but in general, does that mean that, hey, anyone who wants to set up a platform to raise money can do it? Is it that simple, or is there more to it? How does that work?
Yes and no. So the actual crowdfunding regulation that passed in 2012, I want to say it was about 6 pages. And then last spring, the SEC published its rules for crowdfunding, specific to Title III, which is that retail crowdfunding. And I think those rules were like 300 and something pages when they came out. So
gotcha.
It's a typical good intentions, but the actual execution may leave something to desire as far as the complexity. And I'll tell you, that's probably been our biggest learning curve in this business. But I mean, people are crowdfunding everything. I've heard of people crowdfunding, lawsuits and racehorses, and and people people are making money. And the interesting thing is, another thing I read was that one of the reasons I think the SEC was so hesitant is because they expected a lot of fraud.
Totally.
But up until now, there really hasn't been a lot of fraud, or there has been very minimal fraud. And this is one of those. If you're investing, of course, if you're investing in your own portfolio, or if you're investing for somebody else, you've got to do your homework.
Right.
There's always a risk, but I think those risks can be managed.
Sure, no doubt. Well, I'm just sitting here wondering, because again, I think one of the difficulties for these fundraising platforms, again, is proving validity, is and overcoming a lot of those objections and challenges. Because when people are used to, especially on a DIY side, and maybe less so from an accredited investor, but I mean, it's still true for them. There's so much skepticism regarding financial markets. Mm-hmm. I mean, you mentioned, well, you didn't mention this, but I mean, just as far as the big events in 2000 and 2007 with market crashes, there's just so much jadedness. There's so many, one of my friends likes to say that in the investing world, the 20% of the people, there's 20% of the people are just trying to get your money. They'll scam you however they can. The other 60% want your money and they're fair about it, but all they care about is your money. Then there's 20% who actually cares about you, and that's where, I know that's where you guys want to be. And that's where I try to focus my work as well. But because the other 80%, the rest of us have to overcome that hurdle of, credibility and everything else. And so, I'm curious how, I'm curious how you guys approach that. Not because I'm skeptical, just because I want to give you a chance to speak to that. Because again, when I look at Fundrise and other platforms like that, I'm in a place where, and I'm using those because they're a little more neutral from your specific niche. Mm-hmm. I see those and I think, okay, I think they're legitimate because there's enough, I guess, environment around them that I feel like is supporting what they're doing, and they've seemed to have proven themselves enough. But it's just kind of like you're dipping your toe in that water, and you're like, I still don't really know what's happening here yet. How do you hope to educate the market and help overcome some of those objectives for people like myself and our listeners?
Yeah, that's a great question, and one we spend a lot of time in marketing, money, and energy trying to overcome, because we really have two education goals. Is one, to invest or to educate investors, sort of self-directed do-it-yourself investors on why agriculture is a good investment. So the second, and along with that is why crowdfunding is safe and is a good way to get into these deals. And the second is on the farmer side, and that's actually been more challenging. The average age of the farmer is 58 years old in the U.S. So we've got some generational things, but farming is undergoing a big transformation right now. At the same time, I'd say ag financing has been very static and sort of calcified. The farming production side itself has been rapidly transforming. So you've got like robotic tractors and UAVs flying over, counting
it's amazing.
Cows.
Amazing.
So all of that is transforming agriculture, and we want to be the part of transforming the financial side of ag and do that via another way to bring in equity into farmers' deals.
Well, tell me, and that actually brings up another question I had. And I can say this because we spoke a little bit beforehand about where we both grew up and everything. I've got family that's grown up in like the panhandle of Texas, West Texas, farmers their entire lives. And I've got family from East Texas with a rancher background. So there's a lot of ag background in my family. And especially on the farmer side, the actual, like crop development stuff, there's obviously been, it's a hard road, and it's
right.
You mentioned consolidation earlier in other industries. That's definitely happened from farming. And this is definitely an environment where you've got, major corporations who are really taking over in a lot of ways. So obviously they're not interested in this. And so then you mentioned, so what level of farmer are you looking for? Like what is that? What is the space below the major corporation that fits this best?
Yeah, so you can think of everywhere from the spectrum of agriculture is everywhere from major corporations that own hundreds and hundreds of thousands of acres of farmland, or some of these farm funds and publicly traded companies that own dozens of farms, down to the hobby farmer, a guy who has chickens in his backyard or just likes to raise a couple of fruit trees or whatever. We're kind of going for that sort of middle market, smaller end of the middle market. So anywhere from somebody who's trying to raise $500,000 to $2 or $3 million to get on a piece of land. One of the options you kind of mentioned, farming has always been a tough gig. It's always been a tough way to make a living, but especially now, some of America's commodity farmers are really hurting. Commodity prices have been pretty low these past couple of years. So, but yet a lot of these farmers that are having trouble making profits are sitting on millions of dollars worth of land, even though, they may not feel very rich because they're certainly, not,
the cash isn't there.
The cash flow isn't there. So one of the things that we're offering is, some kind of sale leaseback deal, which would still give that landowner or farmer an equity stake in his land, smaller than he has now, but still enable him to keep his family in farming, keep the farm in the family. A lot of these farms have been owned by the same families for generations and generations. In fact, most of the farmers in the U.S. are family farms.
Right.
Even though when you say family farm, well, that some of those farms are fairly large. I mean, that goes from that hobby farm up to the very large farm.
Yeah, some of those family farms can be massive operations.
Right. So we want to help farmers that want to stay on their land, and offer some alternatives to leveraging up their land. The last time that farmers became over leveraged was the mid '80s, and it was kind of very analogous to the real estate crisis we had in in 2007 2008. But in the mid '80s, a lot of farmers had their land foreclosed. So we're nowhere close to that now, the levels of debt on family farms, but they are starting to creep upwards. And we want to offer equity investors as an alternative to keep farmers from over leveraging.
Well, of course, that brings up another question in my mind is what do you see the future of that space being? I mean, obviously you're optimistic on it. Otherwise you wouldn't have started this company. But I feel like the picture that is painted and that we see from the outside looking in is one that's seems to be very dire. You have the Monsantos out there who are these massive evil corporations taking over everything and undercutting prices. And then you have these family farmers who are all going out of business. And or overly in debt. I mean, is that a pretty accurate picture, or is there a sector in the midst of that is actually really poised to thrive?
Well, I mean, it's not what you're kind of describing. You know, the direness is probably North American, sort of commodity farmers. And wow, they had a bad spring. This past frost that went across the blizzard that went across the Midwest
Right.
caused a lot of those people to have to replant and lose their crops. So I really feel for them. But those farmers are resilient. They're a resilient bunch.
Absolutely.
And I don't, I don't feel personally. Think that's a dire situation in any respects. You know, commodity prices are going to rebound at some point, like they always do. Land prices are going to continue to increase over the long term, and then with some creative financing, I think we can help some of these farmers keep farming and stay in business. And then if you look at the global side of things, agriculture is just going to continue to be a booming asset class just because of some of those demographic trends that I discussed earlier.
People have to eat.
Yep.
What, this is obviously a subjective question, but I'm curious, like you mentioned how agriculture is really is a common investment for major funds and institutions and stuff. Do you have any idea, is there kind of a normal, range that, a percentage of a portfolio space that agriculture or timberland investment typically would make up for a major fund like that? Because I'm thinking for our listeners, if they're interested in something like this, I mean, do you see people like a 5% of their portfolio is, and again, I know it's subjective, but what do you see people doing or institutions doing in that regard?
Yeah, that's a great, kind of a topic that I don't think there's a lot of debate, but there's just not a lot of research on. So I was up in New York a couple of weeks ago at the Global Ag Investing Conference, and that was, they actually held a poll on that. And these are all big institutional wealth managers who have some of their portfolios in agriculture. I mean, up to hundreds of millions of dollars, billions of dollars, some of these pension funds. And they actually did like this live online poll on that specific question. And there was sort of a range, and it was anywhere between 5 and 15%. And I think if you look at the university endowments, that's probably about average for those two. So I'd say if you're interested in putting some of your portfolio in something real, something tangible, like agriculture, 5 or 15%, 5-10% would be probably the right way. And of course, the way our platform works is if you want to just kind of dip your toes in the water with $5,000, you can do that. You can just put a little bit in and see how it works. And if you like it, try some more later.
Are there deals available for investment right now?
There will be. So we're going to launch shortly. We've got a couple deals. Our platform, you've got our outward facing website, but our platform is under rapid construction underneath that. And once we get that launched here pretty soon, we'll make that available.
Excellent. So for our listeners, we've been talking a lot about, we're in the middle of going through our Building Berkshire series, looking at Buffett's letters. And, one of the things we've been talking about is, once you get your household in order, your household is your business. And once you get your business in order and you have excess capital, what are different places you can allocate capital? And so on today's show, we've had Chris here from Harvest Returns talking about one of many different options available for allocating excess capital. And his company, Harvest Returns, is focusing on helping people like us be able to invest in farmland on a crowdsourcing platform. So Chris, this has been fantastic. I really appreciate you coming on the show. And so if people are interested in following your work, I mean, do you have like a mailing list or something that people want to get signed up and hear about deals when they come about? How best should they do that?
Yeah, for sure. So, easiest way is to go to harvestreturns.com. We have a learn more button. If you sign up there, you'll be notified when we launch the platform, and you'll have access to look at the deals and to get registered. If you're actually intent on investing on deals, you can also follow us on social media, on Twitter, Facebook, and LinkedIn. And we have a blog so that some of the topics we've just discussed, we discuss on that blog and talk about the wonderful world of investing. And Brian, you mentioned Warren Buffett. He's a farmland owner. He bought a farm in, I think it was like the 1980s, and he's had it, of course, he's a buy and hold guy. So he's had it ever since. He bought a 400-acre farm in 1986. So,
that's one of the points. Sorry to interrupt you, but I thought of earlier when we were talking about the liquidity aspect of these investments, and initially I think a reaction people have is that lower liquidity is automatically bad. You obviously gave reasons that helped debunk that, but another thing is, as we've been going through Warren Buffett's letters to shareholders from Berkshire Hathaway, we've been learning a lot more about his mindset. I mean, and I think knowing that he's buy and hold is, I think, a pretty common understanding for most people, but it's easy to forget what that means and how that looks. And I think a few weeks ago on one of his letters in the late 60s, he talks about they started a new business or made a new investment, and from the beginning said it will take several years before we even know if this has been a good investment or not. And I couldn't help but think of that when you shared that liquidity issue, because, there are some of the best possible investments may take some time to develop. And I think with our mindset, that's where the due diligence on the front end, as you mentioned, is so crucial, but not letting ourselves fall into the trap of thinking that an immediate return or a slow return or anything like that on the front end doesn't mean it can't be a fantastic investment on the back end.
Certainly so. I agree 100%.
Well, Chris, it's been great to have you on the show. Thanks so much for your time.
Hey, thanks a lot, Brian. Appreciate it.
Well, hope you enjoyed this interview with Chris Rawley from Harvest Returns. Remember, be sure and visit them at harvestreturns.com if you want to learn more information. And also, you can sign up for their email list if you're interested in learning more about their company, especially as they begin to go live throughout this year in 2017. So check them out, sign up their email list. I already have myself, and I look forward to updates, and hope you will too. Have a great week. The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.